What is up, guys? Welcome back to the channel. My name is Matthew King, and today I'm going to be teaching you guys about penny stocks. So if you guys haven't heard of penny stocks before, they are stocks that trade below $5 a share. I personally don't like to think of them that way. I typically look at what their market cap is, because typically these penny stocks will have extremely low market caps and also low prices per share. Typically you'll hear of penny stocks when people are talking about like getting rich really quick, because you can buy these stocks for so cheap that if they even fluctuate a little bit, you can make a ton of money, but you're typically going to lose a ton of money. And they're also typically riddled with fraud. So typically these penny stocks aren't sold on these big exchanges like the NASDAQ or New York Stock Exchange. They're sold on what's called like the over-the-counter, and that means like just straight from a broker. Like on the New York Stock Exchange and NASDAQ, they send companies through this evaluation process. So when you look at all those companies, they almost always go up because they've figured out a good way to evaluate them. But on these over-the-counter companies, there's no requirements. So there's a lot of fraud, and they almost always fail. So if you're going to buy penny stocks at all, I would always look on the NASDAQ or New York Stock Exchange, because it's a lot less risky there. Another way to really lower your risk is to put in what's called a stop loss order. So what that does is basically if you bought a stock at $2 a share and you don't want to lose more than 10%, so you could put in like a stop loss order for $1.80, and so when it hits $1.80, it'll sell all your shares at that market price. So that will basically get rid of your risk to that point. So then you won't have to worry about always having to check to see when to sell. So I would definitely recommend doing that if you're going to buy these stocks. I personally wouldn't recommend these stocks for putting a ton of money in, unless you're doing something like venture capitalism, which is putting in a ton of money to one of these small companies, and then you kind of even have like an influence on their company. But I wouldn't recommend using these as a savings technique, because although you can make a bunch of money really quickly, you typically lose a lot of money really quickly as well. But certainly they're a really fun thing to play around with, and I plan on making videos in the future with me testing out different penny stocks, not on the over-the-counter method, but in these big exchanges. And so I think that would be really fun to do. So it's kind of like almost like a gamble, but you could make a lot of money. So thank you guys for watching, and I'll see you guys on the next one.